Hello everyone, it is Sterling here from TRADERDALE.com, and we are back for another video on broker selection as well as Dale's recommended brokers. I have done this video now, this is the third time. I've been trying to shrink this video down to a smaller time. What I finally decided is that if you don't want to hear me go over the basic idea of broker selection and the different types of brokers, for example, if you're more of an advanced trader and you don't need that information, then scroll to the end of this video if you just want the brokers that we recommend. But I'm not going to worry about taking out content to try and cut this video down, because I want those that are new, I want you to understand the aspects of the brokers that you really do need to understand, as well as the difference between types of brokers. So I'll probably post something on here as an addition that gives you the timestamp of when I start talking about the brokers that we actually recommend if you want to skip through this. But let's go ahead and get into it. The first type of broker we're going to talk about is a bucket shop or market maker style broker. This type of broker trades against the client. What that means is when you buy, they sell the position to you. And when you sell, they buy the position from you. Your broker takes the other side of any position, and as such, they make money when you lose, and they lose money when you make it. So you might be saying to yourself, well, geez, that's a bit of a conflict of interest, and you would be right. That is a conflict of interest. That is one of the issues with market maker or bucket shop broker types, and therefore something you need to consider. Some market maker style brokers will not trade against each individual client and rather hedge the net long or short position of their entire client base. Let's take an example. Let's say that you're looking at broker X, and that broker has, among all their traders, they have $10 million long Euro USD, and they have, among all their traders, $9 million short Euro USD. That would mean they have a net long position of $1 million long Euro USD, right? So what they do in that situation is they then go hedge the net long or short position. Either they take the hedge personally or they do hedge it in live market. That's a much better style of market maker broker, but it's very difficult to know how the market maker or the broker you're using, how they interact with their clients, because their client disclosure or their disclosure forms will just simply give the disclosure that they trade against the client, but it doesn't differentiate between the broker that hedges the net long position or the broker that individually trades against the client. It's also important to understand that just because somebody's a market maker broker, if somebody is highly profitable, they will then hedge that trader against live market, so they're not taking the other side of it. So you can still be put in a position where you are in a fair trading environment. It's not like they're going to shut down every profitable trader, because if they did that, they'd get negative reviews. So they do have ways of not getting the downside of their more profitable traders and still allowing them to be a client. It's important to understand that just because a broker trades against their client, they should not automatically be classified as a bad broker. Just because they're trading against the client does not make them a bad broker. There's brokers like, and I'm not recommending this broker, I'm just providing an example. Owanda in the US has been around for years. They've been around since I started trading 13 years ago. While they're not perfect, like no broker is, and there's no such thing as a perfect broker out there, they've had a very good reputation. You know, they've had issues maybe with a little bit larger spreads years ago, or slippage around news years ago, but they've really been a solid broker over the years. They're not perfect, but they've been a decent bucket shop broker. So again, don't just classify somebody as a bad broker if they are a market maker or a bucket shop style broker. This type of broker will very often not charge a commission. They will offer zero balance guarantees a lot of times, and they often offer large sign-up bonuses. These are three things you can look at to identify what type of broker there are. You can also go to Google and type in the name of the broker and then the word disclosure after that, the name of the broker and then the word counterparty disclosure. So let's say you were looking at Alpari. You would type in the word Alpari counterparty disclosure. And you will find if something comes up under counterparty disclosure, that's the disclosure that all market makers have to give, that they are taking the other side of your trade, hence the term counterparty. They are the counterparty to your trades. So they have to have a counterparty disclosure. You can always do that as well. But if a broker doesn't charge a commission, they're making money somewhere. There's absolutely nothing wrong with a broker making money. I'm a firm believer in capitalism. If you provide a quality service, you should be paid very well for that service, or you should be paid well for that service, or a fair price for that service. You should want your broker to make money. If you have a good broker and that broker's not making money, that's a very serious issue, because pretty soon, guess what? You're not going to have that good broker. There is nothing wrong with a broker or anybody that's providing that service making money. But if they're not charging a commission, then you have to ask yourself, how are they making their money? Are they making it through slippage? Are they making it through widening spreads? Or whatever other option they are? With ECN brokers, which we'll touch on next, they're upfront saying, hey, here's what we make off your trades. Here's our commission. Whereas market maker style brokers often hide what they make within the spread. Not done nefariously, it's just built into the spread. The next point was that they will offer zero balance guarantees. Remember, these are all off-exchange trades. Your order never goes to live market. Therefore, it's just numbers on a screen. That's why if the broker makes a mistake and you call the broker up and say, hey, I got slipped 40 pips on this trade, but the market wasn't even volatile at the time, my order just didn't execute. That's why they can go in to again, just numbers on a screen, change the result of that trade and credit your account. Well, how do they do that? They do it because all it is again, numbers on a screen. Your order never went to live market. Finally, they offer large sign-up bonuses. ECN brokers won't do this. These are all retail things, or these are all, gimmicks might be the wrong word, but they're marketing tactics that non-professional brokers that are more geared towards the retail trader do to entice traders to sign up to them. Those are, again, 3 ways you can identify it. 4th way would be going to Google, typing in the name of the broker and then the word counterparty, or the phrase counterparty disclosure after, and find their counterparty disclosure. Now, the next type of broker is the broker I recommend, which is an ECN style broker. ECN stands for Electronic Communications Networks. Unlike market makers, ECN brokers fill your order in live market through a liquidity pool. They have access to true live market, a liquidity pool, whether that's a bank, multiple banks, where they're filling your order in true live market. As a general rule of thumb, ECN brokers are a much better choice for retail traders, as they do not profit from your loss, and therefore they do not have a conflict of interest. If your broker is rooting for your failure, do you think they're likely to provide the best trading environment possible? Pretty obvious answer to that question. So if your broker is making money from your commission, what that means is that they want you to trade larger size and trade for longer periods of time, because that benefits them. You losing money does not benefit them. Will they make money while you lose your money? Of course, they make it off the commission, but soon enough, you're going to wipe out your account. They've lost a client and an income source. So they want to provide the best trading environment possible, and that's a big reason why I prefer the ECN broker. Because ECN brokers offer tighter spreads that they do not widen, they make their money by charging a commission. You know upfront what they're charging and what your total cost of trading is. True ECN brokers are very often highly regulated and therefore tend to be a safer option for storing funds. I want to quantify that statement by saying there are plenty of bucket shop or market maker style brokers that are regulated in just the same fashion and have the same security as an ECN broker will have. The next point is these brokers have an active interest in their clients' success. We already touched on that, but the more successful their clients are, the more money they will make in commission. As such, it is in their best interest to provide the best trading environment for your success. That is a very critical point. That's why I would recommend, if you have the option to trading with an ECN-based broker, go to that broker, because it is in their best interest to give you the most fair, lowest cost trading environment possible. A true ECN broker will not provide a zero balance guarantee nor large sign-up bonuses. ECN brokers are geared towards the more sophisticated trader, the traders that aren't enticed by the $5,000 sign-up bonus if you deposit $2,000 or whatever it might be. They don't offer zero balance guarantees because they're not going for the new retail trader. They're going for the more sophisticated trader that knows how to protect themselves and won't put themselves in a position where a zero balance would be an issue in the first place. Now, regulation, this is an important point. You will find both market maker and ECN brokers that are regulated in their respective countries. I already touched on that. Doesn't mean that just because they're a market maker, they aren't regulated. That's not true. It's especially not true in the United States, where all of them have to be regulated. It's important to keep in mind also which country they're regulated in. Brokers located in major countries such as, but not limited to, the US, United Kingdom, Switzerland, Germany, France, Canada, and Australia have tighter regulations. Broker regulation is only as good as the country doing the regulation. I'll say that again. Broker regulation is only as good as the country doing the regulation. A little common sense goes a long way. I cannot stress that enough. If you see some obscure country in the middle of Africa that has this broker and that's where they're located, or some obscure island country that has a track record of being shady, well, I don't care that that broker is regulated by that government, because the government's shady in the first place. So why do I think the regulation is going to be any more strict or any more valid, any more secure than what the nation is itself? So again, a little common sense goes a long way. Simply put, you should not be trading with an unregulated broker, nor a broker regulated in a questionable country. Most brokers nowadays will be regulated. So that's really not the issue. The bigger issue is the country in which they're located, the country in which they're regulated under. Now we're going to consider 6 points before we get into the 2 brokers we recommend. These are 6 points that you should consider with all brokers. The first point is security of funds. This has a lot to do with the country of origin. Where's that broker located? If they're located in one of the more major countries, then that means that the second point is true. They're regulated under much stricter governing rules, and therefore a safer option for security of funds. Next point is time in business. A broker that's only a month old or a year old might be a good broker. They might be a great broker. But if I have the choice between a broker with years of service, years of quality service, I'm going to choose the broker that has years of quality service. Again, reviews in this situation, you can identify security of funds through reviews. What type of reviews do they have? Withdraw and deposit, types of withdrawals. This is not a huge factor other than the withdraw aspect. Depositing funds, most brokers will deposit funds very quickly. But what you'll find among more of the shady brokers is that the speed of a withdrawal is much slower. So if a broker is slow on the customer service side of withdrawals, then that always gives me a little bit of reason to pause and say, okay, why is this? Why am I having issues with that? So keep that in mind, and also keep in the types of withdrawal and deposit options they have. Credit card, Bitcoin, check, wire. What do you need personally? Does that broker offer it? And finally, reviews under this section. You'll find plenty of reviews if it's an issue. If there's no reviews on the withdrawal or deposit aspect of that broker, well, then you know most people are probably not upset with it, and therefore, more than likely, they are providing a quality service in that aspect. Trading costs. Now, trading costs is a very intricate aspect of trading, because trading costs can be hidden among many different things, but 2 things that are really easy to spot. Number 1, spreads. Most brokers will tell you their spreads. Number 2 is the commission. Those are 2 things that you can see immediately. You can make your comparisons based on very common knowledge that they hand out. But another point, which is actually going to be a separate entity, I think it's the 5th point that I go over here, is execution speed. Execution speed is important because if you're getting multiple second delays or even half-second delays, second half delays in your order, execution speed could be a major part of your trading cost. It could be the most significant part of your trading cost. A lot of times you won't know that until you actually start trading with the broker. That's why I recommend starting out small, regardless of the broker you're trading with. Start trading smaller size and get a feel for the execution of that broker. Finally, as always, as you'll see under all these points, reviews. Execution, trading costs, those things are always covered in reviews. So make sure you do your own due diligence. The 4th point here, charts. Do they have the charts that you are comfortable with? What's the functionality of those charts? If you use MT4, well, do they have MT4? If you use indicators that are based in the MT4 language, well, then you need to have a broker that is also offering MT4 so that you have compatibility with the indicators you're using. The 5th point, which I separated into its own thing as well, as I mentioned before, this is also covered under point 2, I believe, or excuse me, point 3, but trade execution is important. What's the speed of the entry and the exit? That can be your single largest trading cost. Not only the speed, but also are you consistently getting slipped half a pip? Do you notice that the market isn't moving anywhere, but as soon as you click buy or sell, automatically maybe you get filled half a pip above, a couple tenths of a pip above? Over the course of your trading career, execution is a massive factor if you're getting slipped a few tenths of a pip on each individual trade, both in and out of that trade. And then finally, and as always, look at the reviews for execution, because that's one of the common things people will review when talking about a broker. The sixth and final point before we get to the brokers we recommend is the customer service. The point I make here is the more options, the better. I always relate back to a story that I had with a broker called MB Trading. I used them for years. They no longer offer retail Forex brokerage service, but I'll reference them because this was a point that comes to mind. I was in a position I had just entered. I did not have time to put in a stop, and what happened was the power went out at that point. It's a very rare thing. It's only happened to me a handful of times. But what I was able to do is I was able to call that broker, have them manually put in that stop loss for me, and have it done within a very short period of time. Why? Because I was able to call the broker and not get an answering machine. I was able to get an actual human that was able to not only just answer basic customer service questions, but they knew trading, they knew the ins and outs of trading, and they were capable of a basic function like that. So do they respond to emails quickly? Do they answer the phone rather than letting an answering machine answer the phone? And the third option, live chat. That's becoming more and more important. Live chat makes things relatively easy. And finally, do they answer the live chat? Live chat's fine, but if there's nobody there to answer it, well, then the live chat is really useless. And then finally, reviews. Customer service is always something people talk about in reviews, especially if the customer service is poor. So keep that in mind when you are looking for the broker that you're going to be using. The final point I'll make, you'll notice that the word reviews was under all 6 of these. Reviews are important, but you need to use some common sense here, guys. I referenced the broker called MB Trading. If you were to go to Forex Peace Army and look up the reviews for MB Trading, I believe it's like 3.1 star. So it's not the greatest review, but what you'll find is that that broker was one of the more common brokers years ago, 8-9 years ago, where a lot of spike traders went. Now, a lot of you aren't going to be familiar with spike trading, but basically when the brokers were less sophisticated, 8, 9, 10 years ago, and you were able to use different auto-click softwares that would press buy or press sell within milliseconds of the news coming out based on the deviation of the news. And so a lot of people used MB Trading for spike trading. And if you're familiar with trading in and around news, the potential of getting slipped in and around news is extremely high. It's high because liquidity gets pulled out of the market, in addition to a bunch of liquidity flowing in once the news comes out. So if you're going to get slipped, if you want to get slipped, well, trade during news and your wish will be fulfilled. MB Trading was kind of the victim of that because basic market function means that if you're trading in and around news and you expect no slippage, well, you're going to be in for a very unpleasant surprise. And they got a lot of negative reviews from people saying, well, I got slipped 15 pips on around non-farm payroll. My response to that would be, you're an idiot for day trading around non-farm payroll and expecting not to get slipped. So take the reviews with a grain of salt, guys. If somebody says, well, they didn't answer my email for a day, so they're a terrible broker, doesn't necessarily classify them as a terrible broker. And as always, a little common sense goes a long way under the review section of the brokers. So the first broker that we recommend is Global Prime. Global Prime is a broker that I've personally referred to through my website. For anybody that's familiar with me personally, you guys know I don't refer to a lot of brokers. In fact, in the 7 years I've been running DTFL, I've never referred to any other broker other than Global Prime. It doesn't mean that there's not other good brokers out there. It just means that I'm extremely selective with the brokers I refer to because above all else, my reputation means a lot more to me than referring to a bunch of crappy brokers to make money off of the brokers I refer to. Global Prime probably pays some of the smallest amounts for referring clients because ECN brokers, there's not a lot of profit to be spread around. So they don't pay back a huge amount to the person doing the referring. And that's why a lot of your more mainstream educations will refer to bucket shop brokers, because they can make more money off their clients by referring to them to bucket shop or market maker style brokers, where they can get a portion of the slippage, they get a portion of the spread, they get a portion of the commission, they get a portion of a bunch of different things, because there's a lot more money to be made from those brokers. I don't refer to them because, again, the most important thing to me, the most important thing to Dale is our reputation. And if I'm referring to somebody, that's an extension of my reputation. And I'm not going to refer to somebody that's going to potentially damage my reputation, that's going to potentially damage Dale's reputation. We're firm believers in that. That's why we only refer to ECN-based brokers at this point. So they're a true ECN. They have instant execution, very fast execution, very tight spreads, low commission, MT4 charting, which is the most common in the retail market, as well as mobile trading. They offer multiple forms of deposit and withdraw. The withdrawals are fast. They always provide very fast withdrawals to their clients. And they're based in Australia, which means they're very well regulated. Australia has very good regulation over the Forex brokers, and that is a major aspect of broker selection. They have standard 100-to-1 leverage, with 200-to-1 being possible on a case-by-case basis if requested. They also have awesome customer service. If you need a response, there's always somebody there to give a response. And again, customer service is a very important aspect of selecting a broker. Finally, the reviews. If you were to go to Forex Peace Army, which is the site that has the largest number of reviews from all sorts of services to brokers, they have 187 reviews, averaging 4.7 out of 5 stars. That is an extremely high number for the retail market, because a lot of times people will blame the broker for their own personal mistakes. And so brokers can get a bad rap from people just being bad traders and ultimately blaming the broker. So when a broker has a 4.7 out of 5 star review, you know that broker is offering a very safe and a very high quality trading environment for their customers. The next broker we recommend, and the final broker, again, they're a true ECN. They're called IC Markets. This is actually the broker that Dale uses. Dale uses IC Markets, and that is probably the reason why they're on this recommendation list, or one of the big reasons. They have instant execution. They have tight spreads, low commission. They offer a few more charting options, MT4, MT5, C Trader, so a few more options, as well as mobile trading, just like Global Prime. They have more options for deposit and withdraw if that's important to you. They have actually 14 different types of ways you can deposit or withdraw funds to IC Markets, so a lot of options there. Just like Global Prime, they have very quick witdraws. Also like Global Prime, they're based in Australia and a well-regulated broker. They have higher leverage as a standard. Doesn't mean you have to use it, and you shouldn't use this high of leverage in your account. Shouldn't need to if you're using a safe risk per trade. But they do offer 500-to-1 leverage, which to some people is important to get leverage that high, as some people will, let's say they have $10,000 they want to invest into a trading account. They might keep $7,000 in a bank and then put the other $3,000 with the broker, and think of the two separate accounts as one. But what they're doing is they're separating funds between institutions. And so they trade the entire account. They trade the account size based on the entire whole, but yet they keep a smaller amount with the broker. And that higher leverage allows you to keep a smaller amount with the broker and spread your funds around a little bit more for those that like to do that. They don't quite have as good of reviews as Global Prime, but like I mentioned, you have to take those reviews with a grain of salt. A lot of their negative reviews were based on things that are really not the broker's issue. If somebody's getting slipped around a news item, somebody's getting slipped, that's not really the fault of the broker. Now, if they're slipping you beyond where the market actually was, well, that's an issue. But a lot of the negative reviews, kind of like MB Trading, which I mentioned a little while ago, they were a great broker to me for years and years and years, but they only had a 3.1 out of 5 star review. But because of my personal experience with them, I knew that a lot of those reviews were simply failing retail traders trying to blame somebody else rather than looking at their own trading. Dale has used them for a long time, and IC Markets has been absolutely nothing but good to him. I don't use them personally, but he has a lot of experience with them and highly recommends them, and that's why they're included in this list as well. The final point I would make with Global Prime is that we have a 20% discount on any members we refer. So you get a 20% discount on their commission. That is the highest rebate or the highest discount on commission offered by anybody. Now we could keep that, and I'm sure a lot of people would still go to Global Prime, but we offer that money back to the client. So you're getting that 20% back. Instead of being charged their standard commission rate, you're getting charged 20% less, and that's automatically not being deducted from your account. And 20% reduction in the cost of trading is a pretty large reduction in the cost of trading. So like always, guys, don't take my word for it. Don't take Dale's word for it. Yes, we are recommending these brokers, but you should still do your own due diligence. It's not our money that's going to go into that account. It's your money that's going to go into that account. So while you might trust Dale, you might trust myself to offer you a good broker and to know that we're offering you these brokers or we're recommending these brokers based on an honest recommendation, you should still do your own research, because at the end of the day, it's your money and your money alone that's going into that broker. So do your own research, test these brokers out, maybe use a smaller amount to start with, find out whether what we're saying is true, find out whether they do provide a fair environment. And as you're more comfortable with them, then you might move your full amount into that broker. So I hope this video was helpful, guys. I hope you check out these two brokers, and you'll find below this video a link to both brokers where you'll get the applied discount that we have offered through Global Prime as well as IC Markets. And I'll see you all back for the next video. Until then, happy trading.